And we are live.
Hi guys, thank you so much for coming to join us today for our first time home buying seminar. My name is Janelle Cervantes. I'm with Honest Real Estate. We have Kristen, who is with CMG Home Loans. We have Tyra, who is doing credit restoration and repair with us. And we also have another agent from our office, Justin, who is with Honest Real Estate as well. So what we'll do is just go through some of the topics, some of the things that you need to know pertaining to purchasing a home. And we'll start off with Tyra, who will walk you through the credit portion, and then Kristen will jump in. So Tyra.
Hi everybody, my name is Tyra Jacqueline. Follow me on social media. I'll follow back. I am a financial literacy influencer and educator. So yeah, credit is one of the things I talk about, but I like to talk about financial literacy as a whole because how important it is. I'm also the credit leader. I call myself. Some of y'all are old enough to know where I got that from. Some of you may not be. I don't know. But anyway, first I want to turn your attention to that blue and white paper that I want you to turn and see that. So here's the thing. So you ladies are here because you want to learn about home ownership, correct? So as we know, home ownership, that's one of the biggest assets you will ever purchase it. So like I said, I don't want to just talk about credit with y'all. I'm a financial literacy educator and enthusiast. It's a part of my namesake. So what I need y'all to understand is purchasing a home, first and foremost, is one of your biggest assets you will ever purchase. It needs to be protected. How do we do that? How do you protect your assets, period? So when you take a look at the paper that I did show you guys, number one of the biggest assets you're going to protect is with a will and trust. So people say, okay, well, we need wills. I can't afford it. I can't do this. Listen, it's affordable. It's a very piece of important documentation that you need. Not just a will, because some people say I have a will, but I don't have a trust. You need a trust to actually protect your will, because wills are what we call contestable, right? And so the importance of having these type of things is to protect your estates. What are your estates? Your estates is anything that you have, any type of property, whether it be physical or intellectual property, period. It needs to be protected. Wills are contestable. Will by itself is not enough. You need a trust to actually protect your will. Wills is just not for your death. The trust is while you're living and whoever other years you have. How many people here have children? Yeah. Did you know that when you have children out of wedlock, your children don't belong to you? Right? Some people don't. Some people find it out the hard way. Let's solve that problem up front. Okay? When you have children out of wedlock, the custody of your children belongs to the actual state, not to you, unless you go to your state office to actually get the custody from you. So can CPS, we call it DHS here, but CPS, they can come snatch your kids up. It's people in the news right now of having their children snatched up from hospitals because of false accusations or whatever it is. But let's protect our children. Aren't our children our biggest assets, correct? We understand that. Okay, so yes, your children, your minor children, if you go, your minor children is protected in your will and trust as well. Any businesses that you may have, protected in your will and trust, because your businesses are willable to your kin and your children, stuff like that. So that's what I want to talk about, number one. Number two, as purchasing homes, there are certain things you need to do. Let's talk about budgeting your money, okay? Let's talk about saving your money. Let's talk about paying down your debt. These are things that you need to do because it's this term you're going to learn from Kristen called DTI, called debt to income ratio. That screws people up when they want to purchase a home. Why? Because they have too much debt when it comes against their income. You need to learn how to pay that down. You need to budget your money. You need to save your funds. Why? Because Kristen and the title company, they're going to tell you to the penny what you need to have when it comes time to closing. And then I have people say, oh, well, I'm going to get a grant. Grants are wonderful. We want you to get a grant. Kristen's going to tell you about getting grants. Yes. However, can you always count on your grants? Things happen. Grants run out. They do. It happened to me. When I purchased a home, the grant ran out. Thank God I had the money in the reserves. And it's another term you're going to use. You need to have money saved in your reserves. And part of the reason why I'm pointing those things out because my services include all of those things that you just heard me say. Budgeting, savings, paying down your debt, will and trust, and power of attorney. I didn't mention the power of attorney. So let's talk about reality. Any of us can go out here right now and get hit by a bus, right? Because we know the next moment is not promised to us. That's why we need to have these legal documentation in place, in plan, already done. So wherever you go or wherever hospital you in, they actually follow these actual instructions legally for you to make sure that your family's taken care of. Probate, if you ever heard of that, is very expensive. That comes in with that contestable stuff I was telling you about. It's expensive. Probate court is expensive. Probate lawyers is expensive. But guess what? That trust prevents that. This is why it's important to have this documentation in place. Okay. All right. So some of you thought I was just going to talk about credit, but no, like I said, financial literacy is my namesake. So let's talk about credit restoration. Now, good thing about the position that you're in, you may have some negative things on your credit report. It may or may not affect you getting a mortgage, getting a pre-approval, because guess what? Justin and Janelle are not going to take you out to see your house until you have this thing called pre-approval letter. They're not doing it. And guess what? If your credit is not up to par, Kristen can't even give you a pre-approval. So you gotta come talk to me first anyway. Okay. So one of the first steps in the home buying process, making sure your finances are straight, saving up your money, and making sure your credit is correct. Now, please understand when it comes to your credit report and your credit scores are actually two separate entities. However, they are husband and wife, and they need to be worked on simultaneously. Okay, you can have negative items on your credit report and have a low FICO score. Kristen's going to tell you what the FICO score you need for her programs, but it's different things for different programs. You might say, oh, well, you'll hear mortgage people say, oh, well, we can get you in the house at 580 credit score. Why would you want to do that? Please understand, the lower your credit, the higher your interest rate, meaning the higher your mortgage and the less house you can actually purchase. Okay, so credit scoring, credit reports. You may have negatives on your credit report that can prevent you from purchasing your house. That's when you got to come talk to me. Your credit score may not be up to par. Come talk to me. I'm going to help you get your credit score up and help you clean up your credit report if that's what you need at the end of the day. So I'm going to just give y'all a little bit of education when it comes to actual credit scoring. So if you refer to the things with the pictures with the percentages on it, let's talk about how your credit score is actually made up. Now, anybody here know that there is an actual algorithm or a formula as to how your credit scores are actually made? There's 5 factors. This is the 5 factors of your FICO score. And I just want to let you know, when you see things on like scores on like Credit Karma, Credit Wise, Credit Sesame, Self, all those guys show you an Advantage score, and that score is not important. The score you need to know about is your FICO score, okay? Now, unfortunately, there are many different FICO scores. There's like 30-something of them. The mortgage industry, they use a specific FICO scoring model. If you ever wanted to look at all your FICO scores, it's there. It's called at myfico.com. You can see all of your different type of FICO scores. Okay, but the mortgage industry actually uses one FICO algorithm. The car industry uses one. Your credit cards use a different one. Depending on where you're going to apply somewhere, they're all pulling from different bureaus. So that's how that works. So you probably say, well, how do I know what FICO score, blah, blah, blah. So when you come talk to a mortgage officer like Kristen, she does something called a tri-merge. She's going to pull all 3 of your FICO scores from all 3 of the major credit bureaus, which they're actually not bureaus. That's a conversation for another day. And she's going to throw out the top score, and she's going to throw out the low score, and she's going to use that middle score, okay? Which is what we call the median score. So that's why it's important to have all 3 of your FICO score as high as possible. But let's talk about the formula a little bit. So the biggest chunk of your credit is your payment history, and what's most important is the last 24 months, the last 2 years. That's 35% of your credit score. So pay your bills on time. How can you do that? Put your stuff on auto pay as much as possible, okay? Make sure it's getting paid. That's what's most important, because one late payment can drop you anywhere from 50 to 100 points. It can happen. Yes, one late payment will screw you up. Because please understand, any type of late payments, no matter if it's your car, your house, your credit cards, your loans, all those things that's tied to your credit, is messing up. It don't just mess up your credit score at one time. No, it affects your credit score every 30 days up until a year. Okay? So that's why it's very important to make sure you're paying everything on time, even if you're paying the minimum. Of course, I don't recommend the minimum, We're going to get to that in a second. But make sure you're paying everything on time each month. A good way to do that, auto pay, right? All right, so the next biggest chunk of your credit is 30%. That is actually credit utilization, and that refers specifically to your credit cards. So many people actually think that that 30% means keep all my credit cards at 30%. That is 100% incorrect. Don't let nobody else tell you anything different. So let me explain to you what that actually means in easy numbers. Let's say, for example, you have 2 credit cards, $500 each, right? So the limit, $500 each, right? So we understand 5 and 5, that's 1,000, right? So which means that your 2 credit cards, the balances that you have on those 2 credit cards should be no more than $150 a piece, both of them. Why? Because when you add 150 and 150, that's 300. The 300 of the 1,000, that's 30%. That's actually where the 30% comes from. It's the actual balances of your credit cards as opposed to the actual limits of all your credit cards. That's what 30% means, okay? But the sweet spot for your credit cards is to keep them under 10%. And can you pay them off each month? Yes. Do I 100% recommend that? No. Let me tell you why. Say if you want any credit increases. If you're using your credit cards and paying them off each month, the bank's looking at you and say, why should I even give you some more money? Because the whole goal is to get them to increase our credit limits, right? Why should I give you more money if you're just going to keep paying it off each month? Give a little bit on it, just a tiny bit, that's all. You know, and for my people who actually need to increase their credit scores and they really don't have credit cards, I say use them for small stuff. Use it for gas. Use it for just a few things you're going to get in the store. Don't max them out unless you have the ability to pay them off, okay? Another thing is when it comes to paying your credit cards, pay your credit cards by the statement date, not the due date. That's the setup, okay? They are very good at setting this up, giving us bad advice. Oh, make sure you pay by due date. Yes, you want to pay by the due date, but you actually want to pay by the statement date, which is only about 4 days before the actual due date, okay? So pay your credit card by statement date. So the next factor is the length of credit history, which is 15%. So if your grandmama ever told you that credit cards are the devil, don't keep them, cut them up. You had one from 10 years ago, get rid of it, don't do it. Don't call them up, say, cut these bad boys up, close these accounts. Don't do it, okay? Do not put your credit card in the drawer and not come back and use it because they'll close it. So your oldest accounts matter. Old credit is good because that's 15% of your credit score. So you want to keep your accounts open as long as possible. And we all know, excuse me, we eventually may pay off our cars, we may pay off our houses. Believe it or not, that will eventually lead to a lower credit score because closed accounts will decrease your credit. That is what it is. It's kind of a double-edged sword. However, keep your other accounts, like when it comes to those credit cards and all that stuff, keep them open and keep using them. Okay, so that's 15%. That's your history. So the next is 10% is the types of accounts that you have, and this is installment debt and revolving debt. Installment debt are things like loans, car notes, your mortgages, things that have the same payment each month. That's an installment debt. Revolving is your credit card. So think of it as a revolving door, meaning you're using it, you're paying it down, you're using it, paying down, basically the same cycle, but the payment is different. It can be different each month depending on what's your credit card. And the next 10%, the last 10% of your credit is inquiries, meaning you're applying for new credit. Rule of thumb, keep your inquiries under 5 each year. But anytime you see something, they say, oh yeah, do we do a hard pull? Yeah, we do a hard pull or a hard inquiry. That means it's going to show up on your credit that you applied for something. It will also bring your FICO score down. So anywhere from about 2 to 4 points each time you apply for something. Unfortunately, I see people who know they have bad credit, but they go apply for these cars. What people don't understand is whenever you apply for a car, they are running your credit for each lender they're trying to get a card note for you for. So I done seen upwards of 60 and 70s inquiries on people's credit reports because they're applying for a card that they know they most likely can't get anyway. So when you have a lot of inquiries, you look desperate for credit. Oh, you applying for all this stuff, nobody even gave you any money. Why should I loan you any money? So that's why people end up at the buy here, pay here type places where they'll just basically take just about anybody with an outrageous credit, interest rate. Okay. Another thing is if you're paying double digits in your interest rates for your car, you're paying entirely too much, which means you need to work on your credit. So that's the 5 factors of your credit. I will ask for questions in a second. But if you can master that, you can master about 80% of your credit right then and there. Paying on time, not applying for stuff, keeping your balances down on your credit cards, and having a mix of credit. Now, for folks that actually need help increasing their credit scores, because even though I help people with their credit repairing takes the negative stuff off your credit report. That's pretty much all it is. It really doesn't increase the credit score by itself. What you need to understand is you need positive accounts to feed back into your credit scores properly. It's like coming out of a bad relationship. If you was in a bad relationship with so and so, why keep going back to the old places y'all used to go to? No. Why keep hanging around some of the same people y'all used to hang around with? No, you need to feed back into yourself positively now, right? It works the same way with your credit. Okay? So if you're a person, if you don't have any credit cards, or you don't have a car note, or you may have one credit card, but that's all you have, you're not doing enough to help increase your credit scores. People say, how do I get that 700 credit score? How do I get that 800 credit score? You need accounts. You need accounts, okay? And there's very simple ways you can increase your credit score. Has anybody here been paying rent? No? How long you been paying rent?
2 years.
2 years. Did you know you can add that to your credit report to increase your credit score?
I think the apartment place do the.
Some places do. Unfortunately, a lot of times they don't do it for all 3 credit bureaus, but that is what it is. But anyway, like you said, we need to get your scores up as high as we can because of the tri-merge. So yes, you can get credit on your credit report for actually paying your rent. Why not? Because if you don't pay your rent, you're gonna get evicted, right? And that's going on your credit report as well. So yes, you can get credit for paying rent. Also, do you pay utilities? Everybody here pays a cell phone, electric, gas, car insurance, those type of things. We call it alternative credit as well, or you might hear special credit, but those can be used to help increase your credit scores as well. Your monthly subscriptions, things of that nature. We have credit builder savings loans, meaning if you ever, none of these people are paying me, but you can use certain programs to help make small payments, nominal payments to this actual program every month. And what they do is they report your payments to the credit bureaus. They also put that money in a savings account for you. So after the terms are over, however many months you choose to use that program, you actually get the money back minus their interest rate. And it works great. I actually recommend it for all my clients. So with that being said, that's credit scoring in a nutshell. Like I said, credit repair is for you to actually get the bad stuff off your credit. You may have some things that might prevent you from getting a mortgage. You may not. You never know until you speak with the right people, the right professionals. So that's my piece just on financial literacy. At the end of the day, this is what we need. Financial literacy, period. There's a lot of topics, there's a lot of nuances when it comes to financial literacy. It's very important for us to keep our credit straight. Why? Because our credit determines so much. It can determine what zip code you live in. Okay, so if your credit is determining your zip code, that's also controlling what schools your children go to. That also helps determine how high your insurance is going to be. And let's keep it real. Unfortunately, we pay a little bit more anyway. Okay, get your credit together. You can live in different zip codes, have better insurance rates, put your kids in better schools. So we're talking about our future. Let's get our credit together. Let's get smarter with financial literacy to break these generational curses and teach our children better than what we had, better than what we did, because it is a cycle. But increase the cycle of financial literacy, not with the bad credit, what we call the bad credit cycle, all that good stuff. Okay, so I'll be any questions real quick that anybody will ask me before I depart? No? All right, well, I'll be here. You guys have any questions later on? And we're going to bring up one of our ladies, because y'all know we rocking the girl power today. That's what we do when it comes to real estate and financial literacy. Who's coming up next? All right, we got Miss Kristen, real estate, mortgage. Oh, no, come. Okay, so Kristen's coming. Mortgage extraordinaire. She's going to come up here with the PowerPoint and everything. And I'm going to go ahead and get my adjustments going on. Hello, everybody who is joining us in Cyber World. Yes. All right, so y'all about to get a good piece on mortgages. Let me go ahead and sit so we can see you here. And if y'all got questions for me, ladies, the info is there. Okay, so we got Miss Kristen coming, representing, is it CMG Mortgage? Did I say that right? CMG Mortgage, guys. And she's going to tell you a little bit about her processes and how you can get in contact with her to get your next, not only mortgage, but we talking about grants and all that good stuff, okay? To get y'all in the house that y'all need to be in. Thank you to everybody who joined us today. Do me a favor, if y'all are watching live, if you watching us live, throw a 1 in the chat. If you are watching a replay, throw a 2 in the chat, okay?
Okay. Sorry. This way or that way? You good?
Hi everyone, thank you Tyra. My name is Kristen, I'm with CMG Home Loans. Is everybody here first time home buyers? Okay. I talk fast, so I apologize ahead of time. If you need me just to repeat anything, slow down, just let me know, okay? So what I want to get into today is just kind of the process of purchasing a home, how we work with our agents, and which Tyra touched base on the credit process, down payment, and then also down payment assistance programs that are available. With regards to purchasing, is everyone Pennsylvania, New Jersey, Pennsylvania? Okay. I do have some New Jersey information in here. I'll just touch base on it if anything ever changes. So Tyra did touch base on some of these things as to what we do look for when we run your credit and we do the mortgage application. So what we do look for, she mentioned the debt to income ratio. That is the capacity to pay back the loan. So what is your monthly expenses versus your monthly income? Do you have the ability to afford the mortgage to pay that back? Okay. Then we talked about the credit. We do pull what's called that tri-merge credit report. As Tyra mentioned, a lot of these applications out there, Credit Karma, that does not give your FICO score. Kind of gives you like a look-see as to what's on your credit, but you definitely want to get that FICO score pulled. Okay, so we do pull all three for that. And then your down payment, what do you have available? Your assets, do you have a 401k, a savings? You can also look to get gift funds from a family member, and then also the down payment assistance programs. Okay. Once we have everything together, you have that agreement of sale, we also look at the collateral, the house you're purchasing. We want to make sure that the value of that home is there, so we will get an appraisal done on that property. It'll compare just local sales in the area to make sure that your value is there, that matches your sales price. So if you're purchasing a home for $250,000, you want to make sure the house is worth $250,000. Not dollars. Sorry. So what do you need to obtain a mortgage pre-approval? Again, we will take your application, we run your credits, we will have all three of those scores. I'll go over the credit with you, make sure that what is reporting on your credit is accurate. If there's anything reporting an error, we'll go, they won't talk to me. You'll need to go back to that credit card company, car loan, whoever it is, and say, this is showing up on my report. I made that payment. And you have to show them the documentation. They will then give you a letter. We can send it back to our credit report company. They'll work directly with the bureaus to get that corrected on your credit report. Okay? So it's your credit score, your credit profile. As Tyra mentioned, how long have you had credit? We like to have what's called seasoned, 12 months. New credit, if you just have brand new credit, less than 6 months, you might not even trigger a credit score just yet. So they like to have at least a history of how you've been paying so you can obtain those credit scores. And then your monthly debts. How much is your car payment, student loans, credit cards, and then we look at the mortgage payment as well to make sure that you can qualify for them. Okay? 2-year employment history. That's what we look for. It could be a different job. If you worked at place A for 1 year full-time, move to place B for 1 year full-time, we can use that 2-year job history. If it's a situation of switching from full-time wage earner to self-employed, we need a 2-year history of being self-employed. So we do look at your history of employment. Are you steadily employed? Have you job hopped? So there's some programs too that want you to be on that job for at least 6 months. Okay. And then source of down payment, we ask for your last 2 months bank statements. Any large deposits, we need to source those. Cash deposits, we can't source cash. Those will be removed from your total assets. Your direct deposit with your employer, SSI, pension, those we can source. Okay. Any questions on that?
I have a question.
Sure.
So when you mentioned job history,
Yes.
what if you had someone who was a student and is just coming into the workforce and may only have a couple months of job history?
Thank you for asking. That's a good question, actually. So if you do not have that 2-year history, but you were in school, so if you're in school to be a nurse, you can get your transcripts from school and count that towards your 2-year history. So if you've only been employed for, say, 3 months, and we have your transcript showing that you were in school for those last 2 years, we would use that as part of that 2-year requirement for employment history. Thank you. Should touch base on that.
I have another question, Liz. So what if you have someone, when you spoke of income specifically, what if you said going from wage earner to like self-employed,
Yeah.
you will need that 2-year self-employment. What if it was the other way around?
The other way around, you're able to do that. So when you're self-employed, they want to make sure that your business is a stable business. So that's why they look at the last 2-year history. Example, with everything happened with COVID, a lot of self-employed buyers, their income decreased just because of how the work was set up. So in that case, we use the lower of the two. If it declined, we would use your most recent tax returns. If it increased, we just average the last 24 months. As Janelle said, if you went from being self-employed and you owned like a landscaping company and then went to a full-time salary position, we can absolutely do that if you were there for only 3 months of the salary position. It's just opposite when you switch from a wage earner to self-employed because they want to make sure that your business is a stable business. So that's why they need that 2-year history to verify that. Yes.
Also, if you're in the same job and say you've been at the same job for 2 years or
Yes.
more, but then you switch jobs, same role to another company, is that held against you?
No, so if you're in the same line of work, that does not, because you might just be taking that new position because the salary might be higher. Yep, so that's fine too. Thank you. Yes.
So if someone is self-employed, but also have a part-time,
Yes.
just starting, so self-employed for what, 6 months?
Okay.
Self-employed for 6 months, but then getting a part-time job to get approved for a home.
Okay.
How long?
Side by side. So when
Side
you
by
have
side.
2 jobs, when you have 2 jobs, they like those 2 jobs to each be side by side for 2 years.
2 years.
Yeah, so if it's the part-time, they do like a 24-month average for part-time. If that part-time is just your sole job and you don't have the self-employed, but just say if you're part-time, is your main job, they look at least 12 months because that falls under variable income because your hours might change each week and they need to take an average of that 12-month income history. But for self-employed and you have another job on the side, those they like to have the 2-year history.
And what about self-employed and full-time?
Then
Same
situation, just 6 months. They would just,
6 months.
if you were just 6 months, as your example was, it would just be the full-time job that they would use for that time.
Okay.
So yeah, the self-employed piece does need to have that 2-year history to be able to use the income. But if you have full-time job, self-employed, then they would use the full-time job only.
Okay,
For-
for
to
2 years
qualify.
or for 6 months?
So they would look at your income, they still want the 2-year job history. I'm sorry, I get back up, sorry. They still want the 2-year job history. So if you just started that new job and you've been there for 6 months, we would want to just have your previous employer's information. But that self-employed piece that you're doing alongside with that job, that we do need that 2 years in order to use on top of that full-time. That helps, right? And then the benefits of the pre-approval. So what happens is, and especially in this market is very volatile. You have a house that could be coming soon, could be listed for a day, and it already has about 15 showings already scheduled. So you want to be able to determine which loan program is the best program for you. Sometimes too, just depending on the property that you're looking to purchase, sometimes that property might not meet for the loan program. You'll see a listing and maybe if it needs some improvements, it might be a cash or conventional only, and you might be approved for FHA. So we can identify which loan program that you're qualified for. Excuse me, as Tara mentioned, your credit score can determine your loan program. So FHA, they allow for a 580 score, but if you're between 580 and 619, the guidelines for that FHA are a little bit tighter than if you were 620 or above. What we can also do, I might be jumping ahead of myself, if you're a near miss, say if your credit score was a 599, and we have an option of doing what's called a rescore. It's a rapid rescore. We can log into your credit report and kind of do a what-if scenario. So if it was to pay down your Target card by $100, it might boost your score a couple points. So we can look into that as well. If it's a situation where we don't have a rescore option, it might be a credit repair situation, that's where I would suggest you speak with Tyra about that. It also tells how much can you afford. So when you have your property, you have your sales tax, and you also need real estate tax, and homeowners insurance that you're going to need on there. If it's a condo or a townhome, you might have what's called HOA. It's the homeowners association fee that also gets added into your total housing payment. So we can determine your monthly budget. Then you have an understanding too, I already just mentioned this, your real estate taxes and your homeowners insurance, what your overall housing payment is versus your income, what you qualify for, and then what do you need for the down payment. And then also you have your lender and your realtor working together side by side. So everyone's on the same page. Excuse me, we know where your budget is, what your down payment is, what we still might need for your file for you to be able to make that offer on a property once you come across it. I feel like I'm talking way too fast, I'm sorry.
No, you're doing fine.
Losing my voice.
Bless you.
So here's the different loan programs that we have available. Conventional financing, this is a credit score based loan program. So depending on what your credit score is, also determines your interest rate. And if you don't have 20%, it determines what your private mortgage insurance payment's going to be. So that, again, the higher the score or the better the rate, the lower the private mortgage insurance payment. If you're at kind of 600 scores, we might come look at the FHA. FHA just reduced their mortgage insurance premium. So a lot of FHA loans right now are lower than a conventional on your total monthly payment because of that reason, because of the two private mortgage insurance. If you are a vet, we also have VA financing that allows for 100%. And then USDA. In Philadelphia, we're not going to see much of that suburb area. It's address specific. So if it's a situation where it might meet for USDA, we just need to go onto that website and check and make sure. Excuse me. And then you'll see the minimum score requirements vary. Conventional, you need a 620. FHA is a 580. VA 580. And then the USDA 620. Any questions on the programs? Down payment assistance programs are on top of these. So when you have down payment assistance, you have to meet the qualifications for these programs and the down payment assistant piece, which we'll touch base in a little bit. So the mortgage process itself, I'm trying not to bore you guys, keep it as exciting as possible. When you say you're connected with Justin or Janelle, and you call them up, you're like, I'm looking to purchase a property, this is where I want to look, but they'll say, you know what, you need to get pre-approved first. So touch base with me or another lender, depending on who you want to use. Again, they'll run your credit, get the full application, review your income and your assets. So they're going to ask for your pay stubs, W-2s, bank statements. Self-employed, we need your tax returns, a profit and loss statement. So you want to connect with a realtor and a lender. Again, everyone's in the boat all the way till closing. You know, everyone's working side by side with each other and is on the same page. So when you meet with your realtor, you want to discuss, and if I'm stepping on your toes, I'm sorry. You want to discuss just the area that you're looking to purchase, as well as what are your needs. Do you need a 4-bedroom? Do you need a finished basement, a garage, whatever it is, and then they can enter that information in the multiple listing site. On my end, I'm going to go over your budget with you. You could maybe qualify for a $400,000 house, but your budget might be at a $250,000. We want to make sure that you are comfortable with where your total housing payment is. And then once we have everything pre-approved, you're ready to make an offer. Again, this market, there's 20, 25, 50 offers on one house. So it's very competitive. You want to make sure you have everything in line that you're ready to go at that moment. So we'll make sure that we have that pre-approval sent out, and then your realtor will submit the offer. They can do what's called a counter offer, and then Janelle or Justin will call you and say, hey, we want this, or can we remove this, whatever it is, and then we'll get the final once they agree to everything, agree to all the terms. Any questions on that? So then, just as going forward, once your offer is accepted, you do get the executed agreement of sale, and then we might need updated documents. It's not trying to be a pain in the butt, it's just investors have their requirements, they want your pay stubs within 30 days, updated bank statements, we'll need to see your earnest deposit cleared, things like that. So at this point, it's just updated information that we need. You're gonna get a home inspection schedule. Once we know that's good to go, we'll get your preliminary disclosure sent out. What's included in that is your intent to proceed. You're like, you know what, go with this, inspection was good, I'm ready to go. The appraisal fee, that is the one upfront fee. Reason is that is a third-party provider, independent of your realtor, independent of your lender. They are going to go to the property and again, go inside, outside, do the measurements, and then do the comparables to the neighborhood, and just make sure that that sales price and the value of that home are there. Okay. And then your file does get moved over to the underwriting department. They review it to issue the loan approval. Sounds easy, right? So then once you determine the appraised value, hopefully it comes in at value. There are situations where if your offer price was $300,000, appraisal came in at $290,000. Then you might just need to renegotiate some things there with regards to that. Final review. You're laughing because it happens.
I'm for you. Let's renegotiate.
Then the underwriter just reviews everything one more time to issue what's called your clear to close. On my end, once we're closer to this thing, you will have that final number of what you need to bring to closing. You walk through the house on the day, the morning of, the night prior, whatever it may be, sign your closing package, and then you get the keys. So that's the process there. We truly do try to make it as easy as possible because it is supposed to be an exciting time, not a stressful time. So honestly, we try to work together to where get the docs and then you just go through it. Next, 30 days later, you. So these are the down payment assistance programs that we have available. This one is under PHFA, Pennsylvania Housing Finance Agency. So they have what's called their CAVE-FIT. With this program, again, I said you had to meet their requirements as well. So even though you might have a 620 score, if you need down payment assistance, this program requires a 660 score. Okay. Again, if you're that near miss, maybe your credit came in as 650, we'll look to try to do that rescore option to get you to the 660 to meet that requirement. You must be a first-time home buyer. First-time home buyer is you never owned a home or you have not owned a home in the last 3 years. They do have income limits, so Pennsylvania is the entire state. So depending on which county you're looking to purchase, there's different income limits for Bucks, Montgomery, Philadelphia, so there's different income limits. So just depending on where you're looking to purchase, we'll make sure that you meet the income limits for that county. You do need to take the home buyer course. So you would get linked with a counselor. There's a list that PHFA has on their website of counselors. And just do the home buying course, they'll issue a certificate that you meet the income limits and that you did do the home buying course. So what they allow for is 5%. DPI, I'm sorry, is down payment assistance. So you'll see a lot of acronyms too. So 5% of the lesser of the two. So sales price $300,000, they'll lend 5% off the $300,000. Excuse me, if your appraisal comes in lower, you just have to readjust that number. Forgiven after 10 years. So what this means, it's a second lien on the home. So it's not a second mortgage, it's a lien, there's no payments due on it, but if you refinanced or sold within those 10 years, that balance just needs to get paid off for your equity. Okay? And then each year, 10% of the balance gets knocked off. So if you sold in 5 years, you would have 5 years of 10% being knocked off, so half that balance would be due at the time you sold. Okay? Your contribution, you need to have at least $1,000 of your own funds. So we would look at your bank statements, make sure you at least meet that requirement. The rest of the funds could come from a gift from a family member, but you just need to make sure that you have your $1,000 of your own. Okay. And live in Pennsylvania. Any questions on this one? Okay, so this one in Philadelphia, is anyone looking to purchase in Philadelphia? Or outside the city? No?
No Philly bias?
Yeah, listen.
I live in a good area, right in the corner, right before you get to the suburbs.
So I'll just breeze this one. It's similar to that Pennsylvania housing. This one's for the city of Philadelphia. They require a 620 FICO score. You do need to be a first-time home buyer, meet their household income limits. They're a little bit different. They'll do up to $10,000 or 6% of your sales price, whichever is lower. And this one is a 15-year forgiven loan. So this would be a second lien behind the first mortgage that you used to purchase the house, stays on the property for 15 years. Same thing, if you sold or refinanced within those 15 years, you had the
Is this the Philadelphia Works program?
Philadelphia first.
Philadelphia
Yeah.
First, okay, something like that.
Yes. And it just can't be combined with the other, with the Pennsylvania housing.
Can or can?
Cannot. We have other programs which I should add here. Sidebar, sorry. So we have another one, it's called Borrow Smart. It's under conventional financing, Freddie Mac. So your two conventional investors are Fannie Mae and Freddie Mac. This one is just offered from Freddie Mac. So it's called Borrow Smart, and depending on where your income limit is, or where your household income is, you can either have $1,000 to $2,500 in a credit. And that's a true credit towards your closing costs. It's not a second that would stay on the property.
And that can be combined.
Yes, that can be added with this one. Doing one right now.
Love it, and even if you're not gonna use the information for yourself, share. Share.
And nobody was New Jersey, is that correct? I won't bore y'all with New Jersey.
Okay, we can.
In my head, in my head.
In my head. Wait till you see my Jersey.
So New Jersey does have down payment assistance as well. They are a 620, first-time home buyer. Same thing, they do have household income limits, home buying course that you need to complete. And then depending on which county you're looking to purchase, they'll allow for up to 10 or 15,000. Okay, they're a little bit different. They're only 5 years that it stays on. So after that 5th year, it's fully forgiven, and then you have to also live in New Jersey. Primary homes as well on these down payment assistance. They won't allow for an investment property or second home. And that's it. Did I? Oh yeah, talk about this.
Great information, Kristen.
I can send this out too, or any notes, I can get documentation. I think, was there a sign in with emails?
Yeah, there's a sign
So I can,
email, just make sure the emails are on there, and we'll send them.
Yeah, anything you need, if you, the criteria for the down payment assistance, first-time homebuyer programs, whatever you need, we'll get that out to you. Any questions? Thank you. Go squeeze on out.
You can do that. As great as you look. All right, so
Hi.
who we have next?
I just want to introduce myself. My name's Justin. I'm an agent here at Honest, and I can help you and answer any questions you guys might have about finding a home and purchasing and negotiating your best deal.
Hi, guys. Okay, so I'm Janelle, as we mentioned before, and what I want to do is kind of walk you through it from the realtor's perspective, right? So you heard about credit and financial literacy. You heard about the mortgage end of it, and we work together in tandem. Like, we work very closely together. It's really important for you to have not just have a realtor and lender who are knowledgeable, who understands the market, who understands the industry. And from a realtor's perspective, typically I would get a phone call, or as an agent, we get a phone call, and we get both. We are pre-approved and we're not pre-approved. We will refer you to lenders who we've worked with, or you can come with your lender. It doesn't matter. We as realtors, as real estate agents, we work with everyone and anyone. When we get that call, we kind of want to get an understanding of who you are, and we want to understand what you're looking for. So sometimes you guys come and you'll give us a list of 4-bedroom, 2-bathroom, finished basement, large yard, 3 parking car garage. And by the way, I have $150,000 pre-approval, okay? So it happens, and as agents, we do our very best to get you all of that with $150,000, but we also try to be realistic. And As an agent, I can speak for myself. One of the things I try to do is I try to say, okay, what are your I can't do withouts? I must haves. Let's talk about those first. And sometimes, it may be the fact that you do need 2 bathrooms and you need a bathroom on the lower level because mom's older and she's moving in with you and she needs to be, and you want her to have her own space. So that's a must have. But a finished basement, if it's just a single individual, may not necessarily be a must-have. It might just be a could-have, right? So we ask that you be realistic and set expectations with you as well. I am not going to sell you a pipe dream because there are certain things that in this budget tier you can get with no problem. There are certain things in this budget tier we have to work a little harder to get. And then there are certain things in this budget tier that we just cannot get, right? So we have to be realistic with one another. And right off the bat, as your agent, that is what I want to know. What are your must-haves? What do you need to have? What can you live without? That'll be our first conversation. We'll talk about, are you pre-approved? If you're not pre-approved, we have that conversation, part of the first conversation as well. If you're not pre-approved, I would typically refer you to someone that I've worked with, like Kristen, who I know is knowledgeable and great with first-time home buyers, who offer you all the DPAs, the down payment assistance programs that she talked about. Not only do we want you to go with someone that we can work with, we want you to go with someone who can service you in the best way, right? Because you may come with certain things that's very specific to you, this particular buyer, this particular client. And not every lender can service you in that way. You have lenders who may not be able to do what Kristen can do, which is do a rescore. Some lenders can't do that. You may be 3 points away on your credit score from getting to that tier where you can get that pre-approval and get the home of your dreams. But every lender may not be able to afford you the opportunity to get a rescore. Another thing is down payment assistance. All lenders do not work with down payment assistance. Some lenders have their own in-house down payment assistance, and they will talk to you about those. But just be mindful that they come with their own set of restrictions as well. To me personally, I think the Philly First, K-Fit, K-Flex, even First Front Door, I think those are great programs. And why? Well, because 90% of folks can actually get those programs, whereas sometimes lender-specific programs, they're so restricted that there's a very small group of folks that can fall into that tier. So as an agent, when you're looking for agents, you want to make sure you're looking for real estate agents, realtors, whatever else you guys call us. You want to make sure that you find someone who is knowledgeable, who understands the DPAs, who can have a conversation with you realistically about your needs and your wants and set expectations with you, who can put you in touch with a credit repair or credit restoration service that can assist you with that, who can walk you through the process of if you do have some type of income things that may need to be adjusted, that can understand that. Because as real estate agents, one of the things that we are and we have to be great at is facilitating. We need to have an understanding a little bit of everything, enough to get you through the process and enough to point you in the right direction, right? So we're going through the first conversation. We talked about pre-approval. We talked about, okay, what your needs and wants are, and we have the pre-approval document and we're getting ready to go out there. Now, that's one portion of it. We talked about the we talked about the pre-approval, we talked about credit. There are certain things that we need to work on in order to get you to that threshold, be it a little something, maybe a couple extra months on your job, be it that you're getting a raise in 2 months, so we want to wait so we can maximize your price point, maximize your income, or simply that you just don't have enough assets and we need to get you a couple more paychecks in so that you can get that extra $2,000 or $3,000 that you're waiting on, right? So those are the two scenarios. Either you're here or you're there. Let's go with scenario number one. You have your pre-approval, you're ready to go out. We start sending you homes. Once we start sending homes over to you, as your agent, the email that you're getting I'm looking at as well. And sometimes I'll go through that email and I'll say, you know what, Daniela, I just saw these 2 houses. I sent them over to you today. I don't know if you got a chance to see them, but you won't believe it. This actually has 2.5 bathroom and a 2-car garage if you want. And it's in your price point. Let's go. For me personally, as an agent, I'm able to take you out the same day, if not the next day, when you send something over to me. Just because I know how hot the market is, and I try to make time for all of my clients to service them the best that I can. When we go out and look at homes, it could be tedious. Sometimes tears are shed because you didn't get the one we put the offer in on, and we have to go back out. But it's all a process. And as a Christian woman, I believe that what is for you is meant for you. I don't care if we have to put in 15 offers on 15 different properties. That 16th offer, I'm telling you, when that 16th offer get accepted, I have seen clients cry. I have met with clients who are just like, oh my God, this is the best one yet. Because for whatever reason, you may miss out on homes. You may miss out on certain properties that you really like that we just couldn't get you in. But trust me, it's okay. Because when you do get the keys to that particular property, you're gonna love it, okay? So we go out and we see some homes. We talk about documents that you're gonna have to fill out for us, be it compliance documents or offer documents. And we go through that process and then we put the offer in. Keep in mind, we are not the only folks putting in an offer, right? So when I think of an offer is so much more of highest price. That's not always the best offer. I just put in an offer where I was the highest price and guaranteed the appraisal by $10,000 and still didn't get through. Why? Because a cash offer knocked me out. A cash offer that was $25,000 lower than my offer knocked my offer out. And the agent said to me, Janelle, you were this close. I was like, oh. But yeah, so when we put those offers in, we're typically not the only offer. So we just ask that you be mindful with us. An offer has a lot of different components to it aside from price. You're talking about your earnest money deposit. What is that? That is the money that you put down in good faith, showing the seller how serious, the seller and the seller's agent, how serious you are about this particular property. So there's a rule of thumb with most things. That's 3%. For me, if you have it in the bank, if your closing costs total on a particular property, so if you're buying a house at $250,000, rule of thumb is $25,000 is what you're going to need for closing costs. If you need $25,000, you have $25,000 in the bank, and I'm advising you to put an offer in. I'm telling you to put down a large deposit, right? Because that's showing that you're vested into this property. You're not throwing an offer in to see, well, let's just see if I get it. No, you want this house. So we'll put down a $15,000 to $20,000 deposit. And that shows, again, the other side that we're serious. Now, the next component we have is inspections. Everyone says, I'm not doing an inspection. I'm not doing an inspection. I'm not doing an inspection. As agents, we can't tell you guys not to do inspections. It is very important as a first-time home buyer that you get a home inspection. A home inspection serves for 2 reasons. It's the first component, it tells you what's wrong with the house now. What are some of the issues that you're going to be walking into or you need to negotiate with the seller to get repaired? It also helps you to prepare for the future, right? So if you know right now there's nothing wrong with this furnace, the furnace is working fine, but the furnace is maybe about 20 years old. Maybe I should start saving for a furnace. Maybe I should start putting away a little something in the kitty so that in the next 3 years, I can just get a new furnace, right? So that's how I look at the inspection report. It tells you what you need to get done now as far as negotiating, and it tells you what you need to start saving and preparing for. Once I think that's something that scares a lot of buyers because they feel as though so many people are not doing home inspections. If you want to do a home inspection, do the home inspection because there are other components to the offer that can make your offer more appealing than someone who's not doing a home inspection, right? So the next thing is, how quickly can we go to settlement? Kristen and I have done it in 21 days.
30 weeks, man. That's
So,
excellent.
yeah, I mean, it was a mad dash to the finish line, but we have done it. Is that typical? No. On average, settlement is 45 days. 45 days from the day the last signature of the contract is executed. A contract is executed when the last person that needs to sign, 45 days from that date. Now, can it be done in 21 days? Yes. If you're like, Janelle, please, this is the house of my dream, and I really want it. I'll put 21 days on a contract. I'll call Kristen and say,
Let's go. Let's go.
Kristen, she really wants this house, and we get it done. But if not 45, I don't mind doing a 30-day settlement either, because 30 days give us enough time to know that title is going to come back, that you're going to find homeowners insurance, and Kristen will get the contract from start to finish on her end. Another component of the contract is also, how should I put this? Sometimes folks want to know if you're going to do the inspection for informational purposes or if you're not. Now, sometimes with the inspection, folks will say, I'm doing it for informational purposes. What does that mean? That means that you're saying to the seller, I'm just doing this to find out what's wrong with the home. I don't necessarily want you to fix anything. So that's another way that you can do an inspection and it not be as scary to a seller, right? So those are some of the things as agents, when we're submitting an offer, that we're going to be looking at, that we're going to be talking to you and having a conversation to you about. Alexis, do you really like this house? Do you really want it? You think we can get this done in 21 days? Are you going to be here? Earnest money deposit. Can you get it to them in 3 days? Can you take off of work and get to the bank so we can get the check to them? These are conversations that we're going to be having with you ongoing, almost for every offer, because every offer is going to look a little bit different, to be honest. Time of the market. How long has a property been on the market? If a property has been on the market in this market for more than 2 weeks, we're negotiating. We're not going in right off the bat at asking price. We're going to try to negotiate. Now, if we do go in at asking price, maybe we ask for some seller's assist, right? Because remember, rule of thumb, you need 10% of the purchase price. $25,000 is what you need. If you're going to get 10 for one of the DPAs, and we can negotiate another 10 for you for seller's assist, that's $20,000. You just need $5,000 to come to the table, right? So as your agent, I have to be knowledgeable enough about all of these things and all of the aspects of an offer. I also have to be able to work with the folks on the other side. That's also important. It's really important for me when you say, Janelle, I want to put an offer in. What do you think I do first? First thing I do is pick the phone up and call the agent on the other side. Hey, my name is Janelle. I'm with Honest Real Estate. Just want to touch base with you. My client is super interested. How are you today? And we start that relationship building. Okay, so that's pretty much it. Now, that's to get your offer accepted. After you get your offer accepted, honey, we really start the work again. We try to make this process not stressful for you. Anyone who has purchased a home will tell you buying a home is a stressful process. But the people involved would dictate how stressful of a process is going to be. If you're asked for pay stubs, send them over. If you're asked for a bank statement, send it over, because you also dictate how quickly the process moves from your end. If we have to wait 2 weeks for you to send us a pay stub that you got 2 weeks ago, then we're waiting on you. So that means you already got another pay stub. So now we got to wait another 2 weeks to get that pay stub. So send the information in as you get it. Even if you are not under contract, you get a new bank statement, send it in. You get a new pay stub, send it in. Just keep sending it in to your lender, and it makes the process a lot easier. Now, once your offer gets accepted, you and I would work a little bit less together. We'd have a little bit less interaction. And supposed to, but not always, because you guys still call us and say, Kristen told me I need blah, 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 blah. What does that mean? So we'll still be talking to you and walking with you throughout the process. But once your offer is accepted, it goes to Kristen, and you start working on homeowners insurance, flood insurance if you need it, making sure they get all of your information, getting contact information for your HR department so that they can do their verification of employment. Just a slew of stuff, working with the title company to make sure that the title company has the information that they need in order to process the file from their perspective. So buying a home has a lot of different layers to it, and we get through each layer one at a time, one at a time, one at a time. And at Honest Real Estate, we have some of the best agents. I'm sorry, but we do.
That's why it's called honest.
And we work collectively as a group. So if there is something that I need assistance with, I know I can reach out to any of my fellow agents, and vice versa. If they need assistance, they can reach out to any of us. So I hope that this information was informative. And do you have any questions?
About anything.
Yeah, about anything. One of the things I wanted to mention is that even though with a low credit score, you have your rate may be higher, or the program is more restricted. One of the things you can do is, as you get in the house, because some of the times the goal is to just get you into the house, right? You get in the house and your credit score may have been that 580 or 590, and you've made it by the skin of your teeth. What you can do is continue to work with Tyra to restore and repair and build your credit. And within a year or two, you could refinance out of that. Let's just say it's a 7% rate or 7 3/4. You could refinance out of that. Yes, it may cost you something. Some lenders have programs where if you do it within a certain amount of time, it doesn't cost you anything. But you could refinance out of that and get maybe that 5% rate. Now, think about it this way. 5%, if you can get that 5% rate in 2 years, and you're going from 6 3/4, or let's say you're going from 7 3/4, the difference in your payment could be as much as $200 that you're saving every year.
Yeah, and I want to say that I actually did that myself. It wasn't due to credit issues, but some mess happened with the mortgage of the first time around. So I ended up refinancing after a year being in my house and saved like $100 and something per month on my on my mortgage at a lower interest rate.
Yeah.
So that's how important interest rates are. So yes, get into the house. What they say, marry the house and date the interest rate, something like that. They say in the industry, in the real estate and mortgage industry. So yeah, just date it, and don't
It's
put
just
them
to
eggs
get
all in one basket now.
Yeah, it's literally just to get into it. And if you save $150, she saves roughly $150, and let's just say it costs what, $8,000 to refinance, not even that. Sometimes like
I
$5,000,
didn't have
right?
that problem.
Yeah.
I only had to come to the table with like a few $100 left.
And normally you want to have the equity of your home covering the closing costs. Because
Yeah.
there'll be title, there'll be lender fees, appraisal fees if needed. Right now, we have what's called a rate rebound. So if you purchase now, after 6 months of making your mortgage payments, if the rates dropped, you can look to refinance, and we would waive the lender fee and appraisal fee. So again, and what is also included in your closing costs is your real estate taxes and your homeowner's insurance. In Pennsylvania, they're always paid a year in advance. So like that number that Janelle was mentioning at $25,000, that's included in there. When you refinance, you have already an escrow account built up. So any overage in the escrow account, you get that back, and then your new one starts with the new loan. So it could be a situation too where you might want to pay out of pocket to pay, because you're like, I want to get that $3,000 back in 30 days from my escrow account. Maybe I'll just put rather than financing it, you might just want to cover it yourself, knowing you're getting that money back.
So Kristen, roughly how much is it to refinance? Like, if you had to give an estimated number.
Closing cost, again, it's your lender fee, title company, and then the appraisal. Escrows are a little bit different. That'll vary depending on your taxes and your homeowner's insurance. Maybe 3 to 5.
So 3 to 5 guys.
In cost, and then you have your escrows.
Yeah. And that's not bad, because that $3,000 to $5,000 if you had to pay that extra $150 for the 30-year term of your mortgage, come on. Yeah, it's a no-brainer.
And the other goal too to refinance is as you're in your home, you're building equity in your home and you want to get rid of that private mortgage insurance.
Yeah.
Because that's not going towards your home, that's just protecting the lender, that you're going to make the mortgage payments and you're not going to default on that. So there's a lot of, we can't refinance unless there's a benefit to you. I just can't call you and say, hey, refi. It doesn't, it has to make sense.
Has to
We
make
have
They
to follow
try, they do.
the rules. It's called a net tangible benefit. There has to be a benefit to you. So yeah, you want to lower your rate, reduce your term, maybe take it from 30 years to 15, or try to remove that private mortgage insurance too.
And equity basically is the appraised value of your home compared to the loan that you have on there. That's the equity that you have, the difference in the two. That's the equity you have in your home. And, you know, in this market, we're seeing folks that are buying home with zero equity. They're actually what we will call, my husband uses this word, I forgot what it, top over bottom or bottom over top. Because if a house is worth $300,000 and you are paying $325,000, you're $25,000 in the red, right? I mean, like, and that happens. Unfortunately, folks do that. The flip side to it, though, what I would say in defense of those folks is that real estate appreciates. So that value would be there at some point, right? Because real estate is the one thing that you can invest in that the value always, in most instances, always goes up, right? So that's why even when we have folks who come to us and they're talking about, you know, I'm looking for rental for $2,500 a month. My jaw drops because I know you can afford, if you can afford to pay $2,500 a month in rent, you can buy a house and pay $2,000 or the $2,500, right? And not all the time you're going to have that $25,000 in cash, liquid asset in your bank, but you got gifts from mom and dad, you got the DPAs, and some of them you can combine. You can combine First Front Door with K-Fit and K-Flex. I don't think you can with Philly First. I'm not 100% sure. But there are grants where you can combine, like First Front Door give you $5,000. So let's just say you get that $5,000. You get the $10,000 from K-Fit or K-Flex, one of the other DPAs. That's $15,000. And you need $25,000. You get, you know, maybe 6 in seller's assist. What are you left with, right? So you don't have to have, a lot of times as real estate agents, we run into clients who feel as though they need to have a 700 credit score and they need to have $20,000 in the bank. Not necessarily. Everybody's circumstance is different, but that's not necessarily true. Talk to the professionals, talk to people who can assist you, who can help you, who can guide you, and give you valid, factual information. Please, valid, factual information.
Sorry, I just want to touch base on one more thing that
See ya.
you mentioned. Like Janelle was talking about with the down payment assistance and all the other options. We have a program called Home Funded. It's similar to the GoFundMe pages. So with the Home Funded program, you would get linked up with a counselor, a home buying counselor. They'll get your account set up and then create your page. So a lot of times what's happening now is if you're getting married, the people getting married say, please, I'd rather a wedding gift, put it here. And they're helping you with the down payment for your house. So that's another program that we have available. So I can get that out to you as well if you're interested.
Yeah.
I'll take that information myself.
Anybody can donate, so it falls under the gift guidelines, so we have to follow those, but anybody can donate to your account. And then it seasons, and then you can use it for your down payment on your home. So I get that.
Do you guys have any questions at all? We'll come around individually and talk to you and maybe touch base on your individual circumstance